Well, Alpha Blue, and you're welcome back to my channel. If you're new to this channel, you're welcome, guys. So, guys, in today's video, I'm going to be showing you how to trade boom and crash like a pro. Yes, guys, I'm going to show you how to trade boom and crash and make a lot of money from trading boom and crash very, very easily. And this is going to be a very simple strategy, a very simple trading technique, a very simple trading system that if you follow it, you don't need to stress yourself. You're just gonna be making a hell lot of money from boom and crash. So, guys, this trading system just involves three rules that you're going to stick by. So I'm going to show you three rules that you're going to follow while trading boom and crash. That it will help reduce a lot of the headaches, a lot of the losses, a lot of the stress that you have been facing or you have been passing through when trading boom and crash. So this is boom 1000 on a daily time frame. So let me tell you the first rule. The first rule that you should stick with while trading boom and crash is that you should only buy boom and only sell crash. Now, I can't stress this enough, guys. This is one rule that you must stick with if you're trading boom and crash, especially if you're a beginner trading boom and crash. This will save you a lot of headache, a lot of stress. Only buy boom and only sell crash. There are a lot of these indices. There are up to six of them. Boom 300, boom 500, boom 1000, and same with crash. So you don't really need to be, all over the place trying to buy boom, trying to sell boom at the same time. No, just stick with buying boom and stick with selling crash. Only stick with the direction of the spike. That will save you a lot of headache and stress. If you are only buying boom, it means that you're only trading in the direction of the spike, and it's way easier that way because your trades will play out faster, and then you're not having that fear of the spike going against you. Unlike when you're selling boom. If you're selling boom, the price may be going in your favor, you may be making profit, you may be like in $20 profit, and the next minute you're seeing a very long spike that is clearing all of your profit. Some of the time the spike may even take you into a loss or even hit your SL. So you know that kind of thing can really be very frustrating and disappointing. So, and you get to be in a trade for a very long time waiting for it to hit your TP, then just before you know it, a spike is clearing all of your profit and clearing, even hitting your stop loss. So you should only be in the direction of the spike. So if you're following only in the direction of the spike, it means that you're only going to be trading, you're only going to be buying boom and only going to be selling crash. And when you do this, it's going to reduce your stress level by a lot. It's going to reduce your anxiety by a lot. You're going to be more calm and peaceful. You will not find yourself, glued to your phone to see that you take your profit or to see that a spike doesn't come and take you out. So that's the first rule you should stick with. There are some people actually that trade, that sell boom and buy crash. Yeah, there are people that do that, but if you're starting out, I'll really advise you to just stick with buying boom and stick with selling crash. And even if you're an advanced trader, you will realize that it's easier and more peaceful. It's better for your psychology that you stick with just buying boom and selling crash. So having said that, the second rule that you are going to stick with is that you should only be buying boom when it is in an uptrend, and you should only be selling crash when it is in a downtrend. I'm going to show you an example. This right now is also very, very important because it's going to make your trades very, very easy. Now, this is boom 1000 on a daily time frame. As you can see, it has been on an uptrend. So this is the kind of scenario you want to be buying. You want to be buying boom, right, when it is in an uptrend, a very clear uptrend like this. So it's way easier for you to trade boom and hold it for a long period of time when it is in an uptrend like this, unlike when it is in a downtrend. Let me look for a downtrend scenario. Like you see this downtrend right here. Right now, if you're trading, if you want to buy boom and then it's in a downtrend like this, what it means is that the spikes are not going to be coming as often as you want them to come. The spikes are not going to be coming as often as you want them to come. They will be, in fact, it will be going down. So you're not going to make any money. You will likely hit your stop loss. So you should only be buying boom when it is in an uptrend. When it is in an uptrend like this, so you look for you look for points where you enter the market and then you hold your trade because you know it is going up, it is going in the direction of the trend. So you're likely going to make profit, you're likely going to hold your trade for long and it will go in your direction, unlike when you're buying it when it's in a downtrend, like this scenario here. If you're buying boom and it's in a downtrend, and you know you're in big problem. Let me go to crash to show you. So this is crash 1000. You want to be selling crash when it's in a downtrend. It's way easier for you. If crash is in an uptrend like this and you're trying to sell it, you know you're likely going to hit stop loss because you're going against the trend, guys. So this is the second rule. Always buy boom when it's in an uptrend, and then always sell crash when it is in a downtrend. So you look for a buy or a sell in a trendy market. You don't look to buy or sell in a ranging market. When the market is ranging, you want to stay out, look for another indices and trade, right? So that is the second rule. Then the third rule is that you're always going to be looking for levels, support and resistance levels on the chart. Always going to be looking for support and resistance level on the chart. That will help you trade. That will help you trade from level to level, help you know where to put your SL and where to take your profit. Now let me draw levels on this chart for us to see. This is a horizontal level I just drew. This is a level of support on crash 1000 right now. Let me draw another level of resistance, right? Now this is a level of resistance. This is very simple basic support and resistance concept, right? Now if you look at this chart, you already know that when price got here, it got resisted and it came back. When price came here at the first time, it got supported and it bounced back up. So now this is crash 1000 on a daily time frame. This is a very good example of when you should know whether you're going to buy or sell a particular indices. Now this is crash, right? And crash right now is on a support. It just took off on a support and it's pushing to the upside. So even though it seems like crash is on a downtrend and you want to look to sell, but you cannot sell because of the third rule, which is crash is on a support right now. So you're not going to be selling on a support. You're going to wait for it to come back up to this resistance. Then you start looking for opportunities to sell on this resistance. So you're going to wait for it to go up. When it reaches this point, then you start looking for sell on this resistance here to continue pushing it down. So that is how you're going to trade crash and boom. You're looking for points of when they are in support or resistance, then you're going to trade according to those levels. You don't just trade randomly on the chart. You don't just trade randomly. You draw your levels of support and resistance. Now this is on a higher time frame. You can as well scale down to a lower time frame and look for this point of support and resistance to trade from, right? To look for this point of support and resistance for your entry. You don't just trade off a random level. Now let me draw another area of resistance. Now this is an area of resistance on the 4 hour, right? Now what I will do if I want to trade this market right now is I'll wait to see price come to this level. Once it comes to this level, I'll see how it reacts on this level. Is it rejecting off this level? Is it giving me like some rejection wicks? Like right here you can see 2 rejection wicks and engulfing candles that followed. So I'll look for similar thing to happen here. If I see that something like that is happening here, I'm getting rejection wicks, I'm getting bearish engulfing candles, then I can look to sell the market. So I will not just sell the market off anywhere on the chart. You always draw your levels of support and resistance, your horizontal levels, and wait for price to get into those levels before you trade. So that is a very simple, easy way that you should be trading boom and crash. So before I say the last rule, let me just recap. The first rule is that you should only be buying boom and you should only be selling crash. That is the first rule. The second rule is that you should only be buying boom when it's in an uptrend and you should only be selling crash when it is in a downtrend. So you want to buy or sell in a trending market. You don't want to buy or sell in a ranging market. When boom is trending upwards, that's when you should be looking for buy entries. When crash is trending downwards, that's when you should be looking for sell entries. Then the last one is you don't just buy or sell off anywhere on the chart. You're supposed to look for, levels, horizontal levels of support and resistance on the chart for you to trade. You don't just trade anyhow. You look for levels of support and resistance, horizontal levels, and trade. You are going to start from the higher time frames, then you scale down to the lower time frames. Then the last rule that I'm going to show you or tell you is that you trade from the higher time frames. Don't just go to the lower time frames, go to the 1 minute and be looking to catch only in a single spike. I mean, that's old school, that's out of date. You don't do that anymore. You don't just go to the lower time frames, go to the 1 minute or 5 minutes and place your trade. Once one spike comes, you close. That's if you're gambling. If you put on a big lot and you're waiting for to just catch one spike, fine. But trust me, there are times it will not always work in your favor and you're going to lose money. That's pure gambling, in my opinion. If you want to trade boom and crash like a pro, you have to go to the higher time frames and then you trade off the higher time frames. You have to go to the higher time frames and trade off support and resistance levels, trade off horizontal levels, and then you target the next level. That way, you're going to catch multiple spikes. You're going to hold the trade for long. You'll be able to hold the trade for long. Then you catch the long or the whole move. Now, this is boom on a 4-hour time frame. Boom has been, in an uptrend, but right now we see it forming a double top here, and then it has given us two ranges that we can begin to look to trade from. Right, so this is the resistance up, this is the support down. So even though boom is in an uptrend, this is when I want to buy boom, right? This is the kind of market condition I want to buy boom, but I still need to consider the horizontal levels. This is where the third rule comes into play. I still need to consider the horizontal levels. Now in this horizontal level, it is currently around a resistance, so I want to wait for boom to come down to this support down here. I want to wait for it to come down here. When it comes down here, then I look to enter. Or what I can also do is to scale down to the lower time frame. Since I have the higher time frame picture in mind, I have the higher time frame market structure in mind, I can now go down to the lower time frame and scale down and look for more horizontal levels on the lower time frame to anticipate a price movement there, to anticipate some price movement. Now let me show you another horizontal level that I can mark and wait for price to get there and see how it reacts before I trade it. Now this is another horizontal level on the 30-minute time frame. Now this is it. I'm going to wait for price to come back to this point, see how it reacts here, then I look to buy. If it doesn't react the way I want it to react, if it doesn't show me rejection wicks, engulfing candle, I'm not going to enter. I'll just let it to continue coming down until it comes to this higher time frame support. Then I look to buy it from here, right, from this higher time frame support. So it's as simple as that. Very, very straightforward. So the last rule is that you should trade off higher time frames. Don't just go to the 1 minute, 5 minutes. In those lower time frames, your setup can easily be invalidated. Your setup can easily be broken or taken away. Your stop loss will get cleared. But on the higher time frames, these levels, horizontal levels, tend to hold more water. They tend to hold because they are stronger on the higher time frame. So you should look to trade on higher time frames. Put your stop loss and take profit based on your horizontal levels or your levels and support and resistance, and then you're patient. Wait for the price to develop. Wait for it to play out. If it gets your TP or if you're in profit enough, you close your trade. So this trading system, it actually takes a lot of practice and a lot of patience. You need to be very patient. Wait for your setup to play out. You don't need to be jumping around the place, going to 5 minutes looking for one spike. No, just chill out. You have 3 or 6 of these indices. Once you don't see any setup on one, you go to the next one. If you don't see any setup, you go to the next one. You scan all of them for horizontal levels and trade setups, and you definitely see one. You must not take a single trade every day. You have to be very patient and allow the market to do what it's supposed to do. So trading this setup is actually something that involves a lot of patience. You need to be patient because we're dealing with higher time frame. But trust me guys, this will work like magic and this will save you a lot of stress. All of those adrenaline pumping while you're on 1 minute chart waiting for spike, you're going to reduce most of that and you will not need to be glued to your phone once you're trading this way. So these are the 4 rules that I'm gonna share with you on how you can improve your boom and crash trading and you trade like the pros. If you check most of the pros, this is what they do, guys. So I hope you got value in this video. I hope this made sense. If this made sense, guys, don't forget to like this video and hit the subscribe button, guys, for more content like this. I'm going to be sharing with you more tips on how you can trade and make money of Deriv indices. And you can check the description of this video. You'll find the link to my Telegram, where I trade not just indices but also currency pairs, and I also take prop firm challenges, and I'm going to show you all of that on my Telegram channel. Then you can also check the description to find the link to sign up with Deriv, to create an account with Deriv if you got no account yet. So I hope this was useful to you. Don't forget to like, subscribe, and cheers, guys. See you in the next one.